Okay, that's the global market action, but we do have a lot of cues for our own markets as well, and some impact of these overnight cues as well on Indian markets. We have our research team joining in to tell you just that, how the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come to you. What are you watching out for in terms of market cues today?
Well, good morning. Yesterday we actually saw, the kind of underperformance that we saw in the previous week get, reversed to a certain extent. Global market, are moving in tandem with how exactly our own markets are moving, given the fact that you're actually seeing broader markets across the globe outperforming the benchmark indices. Given that trend, the US markets yesterday managed to end with gains, but what was the starking outperformance was the fact that the small cap index Russell 2000 actually ended the month of July with significant gains of over 6%. When you're talking about crude oil prices, another important trigger that we are tracking at this point of time, fresh 3-month high, Brent futures up almost 1.2% overnight to $85.4 a barrel, and WTI futures up to over $81.8 a barrel. Now, coming to the Indian markets, like we mentioned yesterday, it was a range-bound session. However, we ended with gains. It was an outperformance as far as the broader end of the markets were concerned, with the mid-cap index actually hitting a fresh high. And this is a lifetime high that we're talking about. Market breadth were in favor of the advances in the 2:1 ratio. And when you're talking about some of the important cues to watch out for, remember, we are ending the lag end as far as the earnings season are concerned. Some important results today in terms of Escorts, Kubota, PVR Inox, as well as Thermax. Asian markets, have taken a positive cue, trading largely in the green. And, even the GIFT Nifty is indicating a gap of start for our own markets.
Okay, all right. Thank you so much for that, Vivek. But a lot of stocks that will be on our radar as well. Surbhi has that list. Surbhi?
Thanks so much for that. So a few earnings on my radar. The first one is Maruti Suzuki. The revenues were up 22% on a year-on-year basis, but the margins were below expectations, came in at 9.2%. Additionally, the board has approved the termination of contract manufacturing agreement with Suzuki Motor Gujarat. The company is going to acquire Suzuki Motor's 100% stake in Suzuki Motor Gujarat. Power Grid, the revenues were flat on a year-on-year basis, but the margins have come in at 87.2%. Petronet, it was a good set of numbers. The margins were a beat. The revenue was down 16%. The operating margins came in at 10.1% versus a poll of 8.7%. IRB Infra, it was a weak set. The revenues were down 15%. Margins have come in at 47.6% versus 55.1% same time last year. Bosch, the revenues were up 17%, but the margins have come in at 11.3% versus nearly 13% same time last year. And apart from that, ONGC will also be on our radar because the windfall tax on crude oil has increased to 42.50 per ton from 1600 per ton.
Okay, that is a long list, a lot of stocks that will be on our radar. But finally, let me go across to Mangalam, joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So, after the indices bounced back from the 20-day moving average on Friday, the gains continued yesterday as well. Opened flat, saw a bit of a dip, and from there we saw a big move on both the indices, the Nifty as well as the Nifty Bank, which was an underperformer but rallied in the second half of trade to end at the high point. The mid-cap index was a staunch outperformer. However, a couple of trends we need to monitor. The FIs have been selling for 3 consecutive sessions in the cash market. However, the quantum of selling has reduced, so that's something we'll have to watch out for. Now our markets are being supported by the DIIs, the domestic institutional investors, buying 2,500 crores in yesterday's trading session. But over the last 3 trading sessions, what's also happened is that the Nifty futures premium has come down from 150 points to 105 points, and yesterday to around 90 points, telling you that the FIs are selling in index futures. They sold almost 730 crores in index futures yesterday, unbound about 1,000 long contracts, added 7,100 short contracts as well. As a result of which, the long exposure stands at 51%, so it's at an even keel as against 59% at the start of the series. And we have a selling of nearly 10,000 crores coming in index options as well. What is it that the FII sold yesterday? They sold twice the number of puts that they sold calls, and that's telling you support has moved higher. This after the market recovered from important levels and ended at the high point of trade yesterday itself. So where were the put writers active? 19,700 and 19,650. We saw the call writers at 19,750 being caught on the wrong side, so some positions being covered out there as well. What does this imply? That the option writers are looking at supports between 19,600 to 19,650. The support has moved higher and resistance is above 19,800. That's also the level where the GIFT Nifty is indicating an opening, so that's something we'll have to watch out for. The second half of trade will belong to the Nifty Financial Services. The expiry today, 20,500 call and 20,200 puts, extremely active. In terms of stocks, yesterday's big loser was Piramal Enterprises, has now entered the F&O ban, so I'll watch out for that.
Okay, all right. Thank you, Mangalam, Surbhi and Vivek for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, we'll focus on some important earnings.